Holy cow, $879.38 in dividends received in the month of June. And we're going to go through every single dividend received, all the portfolio activity, show you what I'm buying, what I'm selling, why I'm selling it, and then all the dividends that were increased or decreased. But first, what's up? I'm Russ. I'm a welder. I'm a guy that just barely graduated high school, went into the US Navy, and really didn't get serious about investing and personal finance until I was about 40 years old, which was just over 7 years ago. Now, for a lot of you that get the free and fantabulous weekly newsletter, it costs nothing to you. I share a lot of this information, so if you do want to see some of what I'm doing and some interesting thoughts that I'm having about investing or personal finance, click the link below or go to DapperDividends.com and get yourself some free weekly newsletter. All right, so the biggest dividend payment and the last one that will be this big was from Nexstar Media Group, ticker NXST, $228.78. Then we had a BDC, which stands for Business Development Company, in Ares Capital, ticker ARCC, hit us with $199.20. Now, Ares Capital is one of my income factory stocks. If you've read the book, and I would encourage you to do so, The Income Factory by Stephen Bavaria, it lays it all out, a little bit of the method to the madness of what we're doing when we buy some of these high-yielding companies like Ares Capital that don't have very much capital appreciation or stock price growth. Another way of saying that is that we want the income, we want to plow that into more shares, which I haven't been very good about, but I may start doing that a little bit more often, as you'll see, and we just keep that snowball growing. So because they pay a high dividend and we're reinvesting those shares, we're supposed to be right back into that income factory machine. It's supposed to keep the machine growing and spitting off more cash. But how cool is that? Almost $200 in dividends from Ares Capital. Now, the thing to remember, though, is those are non-qualified dividends because they are a BDC, so they're a pass-through entity. So the dividends in that are not favorably taxed. Then $156.12 from the one, the only, the one that is now kind of not really loved all that much, it seems, from things I've seen on YouTube, is SCHD, the Schwab US Dividend Equity ETF. Hey, I think it's everyone else, but it's not SCHD that has changed their sentiment. You know, maybe it hasn't grown as fast enough or it isn't doing what they expected it to do. But once again, before you buy any ETF, you have to understand the methodology, the process it's using to select the funds, to select the stocks, whatever it's holding or not holding. You have to understand that. Like my guy SCHD Stan says, you got to trust the process. So we're doing that with SCHD. Main Street Capital is another BDC, the second and last of our BDCs. They paid a special dividend, which they've paid quite a few special dividends, and their regular dividend, which was good for $82.50 total. And they are a monthly dividend paying company, just like Realty Income, ticker O, that paid us $60.95. So we're getting almost $61 a month from Realty Income. The thing to know about Realty Income, and I think a lot of people miss it, and I sure did when I initially started buying it, is you're not buying it for capital appreciation. You're not buying it for that stock price growth. If it happens, cool, but it's kind of one of those more stable income factory stocks. You're buying it first and foremost for that steady dividend income that hits you every month and it slowly grows. You're not buying it for growth, for capital appreciation. If you want that, Realty Income probably not the best place to look. So once again, I think it falls into that whole thing of knowing what you own and why you own it. $43.56 from ExxonMobil, ticker XOM. I've held them for a long time, bought them in the end of 2020, the middle toward the end of 2020, and really have not added much more because it's got such a low cost basis for us in the $40 range. We were buying some of those shares shares in the 30s, and now it's over $100 a share. So that's kind of one that's in a little bit of a dividend purgatory for me, just letting it hang out. I kind of want to see if and when I will receive all the dividends paid to us of what we initially outlaid in capital to buy that stocks in the first place. Lockheed Martin, ticker LMT, $33. It is a defense contractor. And these days, it's looking like Northrop Grumman, ticker NOC, might be a little bit of a better investment because it's all about the future. Remember, it's not where a stock has been or where it is, it's about where it's going. And it looks like they might be losing out on some government contracts to Northrop Grumman. Grumman? I think it's Northrop Grumman. That's how we're going to say it. And Boeing. So LMT, still holding them. Cost basis around $356 a share. And just going to collect the dividends while I decide what I want to do with them. And then another monthly dividend company, Agree Realty, ticker ADC. You know, I kind of think of them as like the younger, sexier brother that drives a faster car and is just generally more athletic and better looking than Realty Income, which is kind of like the older, settled down, more mature brother. They're both retail REITs predominantly, although Realty Income is trying to branch out into Europe and gaming. Agree Realty, another monthly dividend paying company. I did talk to Joey Agree, had an interview with him last December. So bless his little heart for coming out and talking to me. $26.11. Again, Agree Realty, monthly dividend paying company. And I would love to add them in the low 60s. $20.65 from Visa. I think most of you know Visa. And if you don't know Visa, they're not a bank. They just process payments. That's all they do. They facilitate money going from your bank to the merchant, and that's all that they do. They take a little bit off of each of those billions of transactions that happens with Visa. Just like when you go to McDonald's, ticker MCD, and buy yourself a Big Mac and use some kind of debit or credit card, Visa gets a small little bit of that. McDonald's paid us $17.70 in dividends. We only have 10 shares. Our cost basis on McDonald's is in the high 190s. That's another one that I may think of consolidating out of. So I could easily see Lockheed Martin and McDonald's consolidating into more of a stock we've been buying or one we haven't, which we would love to individually own as Costco, but I just can't bring myself to buy it at these nosebleed valuations. And I need to see Costco closer to $800 a share. I might even pay up for $850-ish. And I could probably, most definitely, maybe see consolidating like a Lockheed and a McDonald's into that. And then the new kid on the block for our portfolio, the Schwab International Dividend ETF, ticker SCHY. It is essentially, from what I can tell, the international version of SCHD. About 130 some holdings, I think. It's just more concentrated in better companies. It's not like some of these other international dividend funds where they just collect every company that pays a dividend. You got thousands of those. So I like to see that it's a little more focused on quality and dividend growth. So that's why we go with SCHY, paid us $10.81 for that grand total of $879.38 in dividends in the month of June. We'll stay on this side of the sheet and go through the dividend increases and decreases really quickly. Now, Realty Income, there it is, a 2% dividend increase. That's for the quarter. They traditionally increase it every quarter, so that'll add up over a year. But either way, gave us $1.37 of extra projected annual dividend income. Then we got Soxl, ticker SOXL, the Direxion Daily Semiconductor Bull shares 3 times ETF. If you don't know what that means, it's just of that semiconductor index. It's leveraged 3 times. They're trying to triple the gain of whatever that is, and it resets daily. So it's supposed to not be for a long-term hold, but we bought it in April at $9.50, 10 shares, and it's already pushing $30 a share. It does pay a dividend. We're just holding it for a little bit more longer of a swing trade, but that dividend decreased 23%, so we lost 82 cents in PADI. Now we get to SCHD, the Schwab US Dividend ETF. Again, people People think it's broken. They don't like it. 1.4% decrease over the last dividend payment. But while that was a 1.4% decrease from the last payment from March to June 25, if you look at March to June 23, it was also a 1.48% decrease. So kind of similar after the reconstitution happened once a year in the spring. But when you look from June to June, there's an 18.21% dividend increase. So the reconstitution happens where they pull stuff out, put stuff in, and then it takes a little bit to acclimate. But overall, I think when we come next June, we will have a dividend increase overall. But we did decrease $8.70. We already talked about SCHY, the Schwab International Dividend ETF, had a 0.22% dividend increase, which saw 7 cents extra brought our way. And VTI, the Vanguard Total Market ETF, down 1.03%. And the quickest explanation is VTI is the total US stock market. It's almost everything. There's some micro cap penny stocks and some things that are not held. It's almost 4,000 publicly traded US companies. So you're really encapsulating almost everything that you could be buying on the US stock market. That gave us a decrease of $11.76. So yeah, it does kind of stink seeing our PADI drop almost $12 from some of these ETF adjustments, but honestly, I'm thinking in years, not in months or in quarters. So these things happen, but overall, the upward trend is there for dividend raises to continue. Let her rip, Tater Chip, right through the buys. Zoetis, ticker ZTS, 9 shares at an average price of $160, gave us PADI, additional $18 projected annual dividend income for the year. But Zoetis is animal pharmaceuticals. That's the shortest and easiest way to say it. They make our pets better, keep them healthy, keep livestock healthy. When the world is growing, needs more protein, they're going to keep animals healthy, whether they're companions or if they are for food. Bought 1 share of VTI at $293.50, gave us extra PADI of $3.71. And my goodness, that's crazy because as of this recording, it's pushing $309 a share, all-time high. I actually thought it might have been a little bit expensive at $293.50 when I bought that share. We'll see, but right, over time, the US stock market goes up and to the right. May not be every week, every month, or every year, but in aggregate, it will always go up and to the right. Why? Because companies innovate, they expand, they grow, and that's just a great tailwind for American business. And right, Warren Buffett always says, never bet against America. He also said Bitcoin is rat poison and it won't work out well, and it is way the hell up since he said that. There's our new position in SCHY, the Schwab International Dividend ETF. 31 shares in June we bought, average of $27.25, gave us $10.50 of PADI. In our self-directed IRA, we had 290 shares of Aries Capital, and I decided I just wanted that at 300 to get that flavor, get the juices rolling of potentially just saying, screw it, I'm going to dump all the dividends received from that into more Aries Capital shares. So hopefully we'll see if that continues. 10 shares, $21.97 average, gave us $19.20 of PADI, making Stephen Bavaria proud. And then 2 more shares of Realty Income, ticker O, the monthly dividend company, at $57.10 on average. And that gave us extra PADI of $6.46 for a total PADI gain of $57.87. So what we sold, 73 shares of Nexstar Media at $172.10. Now, if you follow the channel, talked about it on the live streams that we do every Sunday night, unless I'm in England or Scotland or Florida. The reason I sold Nexstar is that it's been on my mind for quite some time. It's been creeping up on me. I've been invested in it for over 3 years now. And you know what? It's just chopped sideways for about 4 years between the high to mid 180s and the mid 140s, and it really hasn't broken out of that range. There's a few trips been up and below it, and it's just, I think, a melting ice cube. It's a fantastically well-run and managed company, but the industry is shifting, and I liken it to if you were to invest in the number one horse and buggy manufacturer circa 1897, it doesn't matter how well run they were. The industry was shifting and changing with the advent of the automobile, and before long, people just wanted the cars, the automobiles, and the horse and buggies went away. So I don't know if it'll be that dramatic, but Nexstar Media, I think because of the industry they're in, is a bit of a melting ice cube, and I'm just deciding to move on. If I was retired, living off that fixed income, I think it's pretty predictable and pretty safe, but we're not going to see much share price appreciation, I don't think. As I record this, they are around $181 a share. But that cost us $543.12 of PADI, but it's okay because I think that we will make it up in capital appreciation plus some smaller dividends elsewhere. So we have 300 shares of Vici Properties, ticker VICI. They are a casino landlord is what you need to know. They own some of the biggest properties on the Vegas Strip, a few other places in the world. They're also trying to branch out into experiential and family entertainment like a bunch of boleros. So this is a bit of an experiment we've been running with them. We sold a covered call that expires on July 18th, 2025 for $32.50. If you don't know what that means, don't worry. Options take a bit of a time to learn, but that means that I have to sell my shares at $32.50 if they are over that and they are called away. So somebody paid us 70 cents a share times 100 shares. Every options contract is for 100 shares. That gave us $70. Schwab takes 34 cents off the top in fees and commissions. So that left us with $69.66 that we get that cash to do anything with. And when you add 70 cents to the $32.50, that means our break-even price is about $33.20 for Vici Properties. So that means our PADI in June decreased by a whopping $485.25. And again, that's from selling and repositioning and thinking I'm taking a bit of a step backwards to take 2 steps forward. Now check this out. This is our investment net worth. This is everything with mine or my wife's name on it, except for our HSA, which is through my work. We don't control where the money in that is invested, so I'm not including our HSA in this. By the way, fun fact about HSAs, this is not advice, talk to a professional, but if you save your receipts and you pay cash for everything, at a future date, you can submit those receipts. It's indefinite. 30 years from now, if you had a $500 medical expense today in 2025, you can save that receipt, and then 30 years from now, you can submit it and take out $500, which hopefully that $500 through the magic of compounding will grow a whole hell of a lot more. Google that, look into it, talk to a professional if you do have an HSA, a health savings account. Now, we won't go through all of these, but our number one position is ticker DFUSX. Remember, if you see an X on the end of the ticker and it's 5 letters, it's usually a mutual fund. I haven't verified if that's every single time, but from what I know, an X means it's a mutual fund, and that's inside of a 401k. That's helping us to get toward our overall goal of 85% funds and 15% individual stocks. Why? Because a study was run that shows that 92% of professional fund managers over a 20-year period cannot outperform the S&P 500. So it's really difficult to do, and I kind of want to idiot-proof our finances, our portfolio, by putting the bulk of our money into funds, but I also want to scratch that itch with individual stocks as I learn, as I improve, I can continue to grow my knowledge base and hopefully the quality of our stock picking. So DFUSX is essentially the dimensional funds version of the S&P 500 or the Vanguard flavor of that, ticker VOO. Then we also have the Vanguard Value Index Fund, ticker VVIAX. It's large cap value funds, mostly dividend paying companies that have a undervalued bias to them. and that's our second biggest position. And the third, rounding out the mutual funds, is the Fidelity Midcap Index Funds, ticker FSMDX. It's midcap companies, and there's some that think midcap companies will have their day in the sun eventually and outperform. That day has not been yet. We also have SCHD is the number 4 position, and VTI. So our top 5 positions are funds, and then the biggest individual stock that we now have went from Nexstar Media. We've been selling it, and it is now Realty Income, ticker O, followed by Visa and then Vici. And if we flip over and look at the PADI, what that looks like here in early July, the projected annual dividend income is just about over $10,000, about $10,186. Again, this is not including 529 accounts or HSA, any savings, emergency funds, anything like that, just investment accounts with mine or my wife's name on it. And DFUSX hitting us with $2,417 annually, VVIAX $2,214, and then there it is, Ares Capital. I think that is talking to me right now and saying, hey Russ, we're at $796 over here. We want to be at 1,000. Just get us to that simple, clean 1,000 and we'll be all happy. So I actually may do that as a goal to get Ares Capital up to $1,000 in annual dividend income. And currently 60% of the dividends we receive are from funds, while 39.8% are from individual stocks. I'd love in the comments below for you to share your thoughts about my moves, my portfolio. What about you? What's your biggest individual holding? Let us know. Or not. It's your world, boss. But if you would like to know a little bit more about why I sold Nexstar Media and continue to sell Nexstar Media Group, and what we are buying instead, then in this floating little box next to my head, I'm going to tell you all about it there. So yeah, just click that floating little box right there, and I'll tell you all about it there.